Today we're going to talk about some big name hiring freezes, more and more layoffs. We'll get into that in this video. Plus I want to say a few things about the FTX Bitcoin meltdown, and I don't want to talk about that much more than I have been lately. So this will be the last time I talk about it for a bit, hopefully. I think you pretty much understand now what's going on with that stuff, so we'll get into that in this video. Understand, nothing we say is intended as personalized trading advice for you. And I also got the best email message. It just knocked my socks off and it made my day. I'm going to show you part of this really incredible message that is so important, especially for me as a teacher and as an author.
Good morning to you, Robin. And these are deep cuts. Tech giant Amazon planning to cut 10,000 employees starting this week, according to the New York Times. And this is the largest layoff in the company's nearly 30-year history.
So get ready to hear that more. You're going to hear a lot more of this is the largest, or the most, of the greatest number of layoffs in the company's history, not just Amazon, but a lot of other companies as well, many of which are actually going to go into bankruptcy, so complete wipeout. But it's not just this one company, that's just an example. But let me go on a little bit more and you'll see it's actually pervasive, especially across the technology industry. There's a lot of layoffs, there's a lot of unwinding of employment that has to happen.
It's also something we've now been hearing from so many tech companies, including Facebook parent company Meta, Lyft, and Twitter post Musk's takeover.
And the word of the day is going to be hiring freezes. A lot of companies don't want to just say they're laying people off, so they do other things first, where they say we won't hire more people, we'll sunset some employees, we'll let them retire out, and they don't replace those employees.
Disney planning to institute a targeted hiring freeze as well as some job cuts. That's according to this internal memo CEO Bob Chapek sent to company executives late Friday. In it, he said Disney will look at every avenue of operations and labor-to-find savings, adding, quote, "I'm fully aware this will be a difficult process for many of you and your teams."
That's just another way of sugarcoating the firings that they're going to have to do. Any company in this environment will have to decline in terms of how many people are working for them, because of how difficult it is for companies to function in this environment where nobody is spending any money. Now, just a quick thing about the FTX debacle. I always tell you one thing, and I tell you again and again to the point of nauseum. It's not about where it goes. Even if it's $1 billion company goes to zero, that's meaningful, of course. It's going to have a lot of effects, of course. But it can be worse. It's worse than a lot of the most dramatic fearmongers are telling you. This whole FTX breakdown, it's about the speed of the decline. So listen to what she says in this part about how quickly it fell. If a company goes from 22 billion to zero over 5 years, that's horrible. What if it goes from 22 billion or whatever level it was at to zero in a week? There's a big difference there. That's a shock. That's going to have unbelievable ripple effects.
You talked about some of the other analogies, Enron. Other examples like this have taken years to play out. This happened in not even a week. So a week ago or less, it was about a $32 billion company on paper.
And something I want to point out that's happening now, they are going to scapegoat and blame Sam Bankman-Fried. And yeah, it's his fault. Everybody who runs a company should be in charge of every aspect of the company. Anything that happens, it's on you. It's your fault. Sam Bankman-Fried, though, he's an easy guy to overlook or look down upon, and he's a funny-looking guy, I'll give him that, and people are blaming him. Here's the risk, though. It is his fault. I'm not saying it isn't. It is his fault, but I'm saying the risk is that they're blaming all of this on him. It's a structural problem. This will happen again and again with other companies. A lot of these crypto companies were bailing each other out to keep the volleyball in the air, to keep juggling different companies. And now there's going to be a lot of regulation, people looking into the numbers, and they're going to realize that the emperor has no clothes. The last shoe to drop has not happened yet. We're not even close to that. Things will get tougher and tougher, and there will be a huge buying opportunity. I promise you, I'm going to tell you when I believe it is in cryptocurrencies. Not now, not even close yet. There's a lot more downside through all these gyrations and news coming out. And for example, a lot of the dastardly things where they took some money, clients' money, and they use that in other companies or to invest in things without the client's knowledge, that's Bernie Madoff caliber kind of BS.
30-year-old Sam Bankman-Fried was the face of this industry, especially in Washington, D.C. He was also seen as a backstop for smaller players in the industry that ended up going bankrupt earlier this year. He spent hundreds of millions of dollars, bailing out other companies.
And hey, everybody at the Leeds Army, I'm sending you a personal email from me. I want to tell you about some of the stuff I've got in mind. I want to get your opinions too about what kinds of stuff you want to see. I want to reward you guys for joining the Leeds Army. You guys keep this entire channel going. You keep the whole business running. You're buying a slice of Peter Leeds and the Peter Leeds team. That's what joining the Army is all about. peterleeds.com/army. I'll send you a direct email for myself within the next week or so. I'm very busy, so I'll do my best, but it'll be soon. And just to be clear, in this next part, she's talking about how that's what caused the price to crash. It doesn't matter what you identify as what caused the price to crash. It was a foregone conclusion. This was a company with a much too great valuation. Eventually, the truth comes out. The Buddhist will tell you that three things can't be hidden: the sun, the moon, and the truth. It was a matter of time, and there's a lot of other setups right now where there's a lot of concerns among other companies as well. This will not be where it ends.
And called into question the financial health of the exchange. That caused users to panic. It crashed the price of a cryptocurrency that's closely associated with FTX, and it essentially caused a run on the bank, meaning everybody rushed to withdraw their cash or their cryptocurrency at once, and FTX could not keep up the run.
And I hope you paid attention there where she's talking about the bank run. People are on a raft, and maybe it's crypto, maybe it's the FTX meltdown, or maybe gold prices collapse, or banks start doing bail-ins or bail-outs. What if technology stocks start crashing? Sometimes you're going to have everybody run from one side of the raft to the other. Everybody's out of position. Nobody should be on the edge of the raft, but they're out there, and then they have to correct by running to the other side. And a lot of people are blaming that the merger didn't happen, and that's what caused the crash. It was a foregone conclusion. If the merger had happened, it still would have been a crash. Just two piles of garbage together rather than one. Most people already lost money trading cryptocurrencies. Now it's about to get a lot worse. And this is a time when everybody who was a cryptocurrency enthusiast is trying to tell me and other people it's got to go up. You got to buy. You got to get involved. Even a lot of YouTubers are calling it wrong at $60,000, saying buy more, buy more. It's going much, much higher. They just don't know what they're talking about. And they got a lot of people into financial trouble because of it. I was always cautious with cryptos. And I did get in early and I didn't cash out on the big run. But I just know that this entire market, not just cryptos, the stock market, the real estate market, everything is completely delusional right now. The curtain has got to be pulled back more. It's only a little bit so far. People are starting to realize they didn't know what they're talking about. They're just telling you stuff that they heard from somebody else who didn't know what they're talking about. And please don't take this the wrong way that I'm against cryptocurrencies. I think it's brilliant. I think it's a matter of time. Nothing can stop an idea whose time has come. This is an example of that. This is just the way that society moves faster and further ahead. Everything's going to go digital. There's a lot of downside, especially with the central bank digital currency that I've been talking about probably longer than anybody else, that if they can do the central bank digital currency, there's so many ways that they can make your life worse, control you, watch what you do. It's a mistake, a mistake, a mistake.
The rival here, Binance that I mentioned, said at one point last week it was going to buy FTX. It was going to bail that company out. It then backed out of the deal, giving FTX really no other options than to file for bankruptcy, and that's where we are now.
Last must-watch part here, talking about how they completely snuck things past investors. They took the investors' money and used it to invest in other companies and other investments. Try and sweep more dirt under the rug, make up for the mistakes that they made, and to basically fuel their greed.
So a source close to FTX's operations told us the hedge fund Alameda was using FTX customer money to trade without customers' knowledge. This was done in a way to hide all of that from most employees even, and some of their high-profile investors in the company.
Wow.
Just remember, this is not the last shoe to drop in this whole conversation. And until shoes stop dropping, we're not going to get to the capitulation point that you should be taking advantage of. And here's a quick headline for you that is telling you more of what I've told you is coming is actually coming. Biden administration warns of historically large increase in student loan defaults if there isn't debt forgiveness. So let me just read you a couple of the points from this article, and I'll give you the Peter Leeds translation of what they're actually saying or what they should be saying. Student loan default rates may spike if the Biden administration's loan forgiveness plan is blocked. That should be worded as student loan default rates will spike, regardless of what ways that they fumble around trying to play political games. Those loan defaults are going to spike. I've been telling you about this wave of defaults, delinquencies, and bankruptcies for years now. And they're all leading up to this point where they're all going to start happening now. It goes on to say the department anticipates there could be a historically large increase in the amount of federal student loan delinquency and defaults as a result of the COVID-19. No, let's put that through the Peter Leeds translator. It should say, the department anticipates that there will be a historically large increase in the amount of federal student loan delinquencies and defaults, regardless of what they say the cause is. They point to stuff, because of inflation, because of... No, it's because it was going to happen anyway. I've been telling you this leading up to this for the longest time. You can't get out of it. They're fumbling around trying to do student loan forgiveness. They're saying they're blaming it on inflation. They're blaming it on... They're blaming it on all of these BS reasons to try and say, well, this is why this happened. But isn't there a value in seeing it happening ahead of time? For example, the economy is so weak, so we're going to enter a recession because we're getting there closer and closer every day. And at that point, there's going to be even more layoffs. And you're starting to see, and especially in this video, I talk about it a lot, but there's so many layoffs right now. The unemployment rate's going to rise. There's going to be a lot of strain on most aspects of the economy. And that's not even including how quickly housing prices will decline. And here's the email message I got from a long-time follower and supporter of the whole Peter Leeds team and everything we do. I'm jumping in halfway through and I'll get to the story I want to share with you. This is from John. Peter, I want to let you know that you helped me confirm something my father impressed upon me years ago. He was a banker for 40 years and I was one for 15. His advice always to me was that money is a necessity, but remember, it's not about how much you have. It's what you do with it that matters. In one of your recent videos, you mentioned 3rd edition of Penny Stocks for Dummies Part 4. I got out my 3rd edition signed by you and went to page 267 and read aloud what it said in the book, discovering your real deeper purpose, and it is not money. Do not invest to make money. You'll be more effective, you'll have better results, you'll work harder, you'll pay more attention if you're investing for the real deeper root cause that's actually driving you, which you might not have even thought about yet.